jump right in. This is Mary Beth Harrison. This is our Dallas Native Live, and thanks for joining us today. I'm so excited about this topic, not because I'm excited about insurance, but I'm excited to talk about something that we are, as homeowners, as car owners, as anything. Insurance is something we have to have. You cannot own a house or a condo or a townhome and not have insurance on it. You cannot, especially if you have a loan, because the lender will just write you a little cute note going, oh, by the way, we noticed that you have not paid your insurance, and so we're going to do it for you. And I guarantee you it's at an exorbitant price, right? It's exorbitant price. And so it's something we have to have. Like I said, you can't close on a house with a loan that you don't have insurance. And so it's something that we kind of get and put it on a shelf and go, okay, checkbox, I've done that, I've got my insurance, and we never go back and look at it again. Tammy, it's amazing to me. And what made me come to this was I brought you all of my insurance coverage. So, because I have rental property, I have my own property, I have cars, I have an umbrella policy because of business and whatever else. So I have a lot of insurance. And so when I brought all of that to you to review it, you were able to save me thousands of dollars. I mean, not just a couple of hundred, it was like $1,000 a year. It was such a revelation to me. And I know you took my old policy and made it exact to the new policy. So it's not like I lost insurance or lost coverage, but something I want you to address is the deductible, because that's what was like the slap in the face, was not understanding my deductible. So yeah, let's just jump right in. Let's start with that. It's probably not the logical place. We'll start backwards and work our way forwards.
You know, when you have a claim, you got to pay that deductible. So, I mean, you know, that's important. So, right. Insurance companies have deductibles, and you can get, so let's just use your most common claim, which is a roof claim. Right. Most common is a roof claim. So your house is insured for $500,000 and you need to replace your roof. If you have a 1% deductible, then you're going to pay $5,000.
$5,000, right? So I want everyone to understand too, the deductible means that the insurance company will cover the payment for the roof less your deductible. So just for easy numbers, if the roof costs $10,000, you're going to have to cough up $5,000 of it. Is that what you're saying?
Yes.
And then the insurance company will write a check for the additional $5,000.
Yes.
Okay.
Yes.
All right. Just so long everyone understands what a deductible does. Okay. Now go ahead from there.
Yes. And so a lot of companies will let you increase your wind and hail deductible. And some of them will just, if you call your insurance company and say, I want a 1% deductible, they're going to give you a 1% deductible, and they're going to give you a 2, 3, 4, 5% deductible on wind and hail, because they don't want to pay out that money.
Okay. So two different issues. So what would damage a roof if it wasn't wind and hail? What else is there?
Tornado, lightning, fire.
Okay.
Those are less common.
Right.
So they're okay writing a lesser deductible for those than they are the most common. I mean, the most common claim that every insurance company has when it comes to homeowners is roof, wind and hail.
Right.
Especially in this area.
Yes, especially. So you're telling me that on an insurance policy, I might have a 1% deductible for my roof, unless it's wind or hail.
Exactly.
And now it's, what'd you say, a 3%?
2%, 3%, 4%, 5%.
So let's just take my $500,000 house that I started with. You're telling me that I might have to cough up $10,000 if it's a 2%, or $30,000 if it's 3%. I mean, $15,000 if it's 3%. I might as well pay for the roof out of my own pocket. What's the point?
Yes.
Oh, wow. I did not realize there were two different roof coverages.
Yes. And so that's probably the most common thing that I find when reviewing policies is they have two different deductibles and the client doesn't know about it. They
Right.
just
We just
had a
see
1% deductible.
Right. We see the deductible. It's 1%. Exactly. Before I forget, if you guys that are listening have any questions, please go to the chat box. Usually Candace, my great trusty assistant, is on the call with us, but somehow I let her go on vacation. I don't know how that happened. She has this chain around her leg and somehow she got loose. I don't know. So I'm going to be watching the chat box today as well. But if you have questions of Tammy as we do this, please jump into the chat box, not the Q&A, but the chat box, and type in your questions, and we'll stop at some point and go through them and answer them. So, okay, so back to this deductible. So we had a fire in the house or a flood. Let's talk about that, because that's something else that probably is as common as anything, is that dishwasher. I mean, the dishwasher leaking, or the washer dryer, the washer hose snapping, or water heater deciding to go out in the middle of the night. It's kind of like your smoke alarm. They're supposed to go out about 2 o'clock in the morning.
Yeah.
I think there's a warning sign on all of those equipment that says I'm only going to go off at like 2 or 3 o'clock in the morning. Right.
Yeah.
So if the water damages your house, does it fall back to that 1%, or is there a whole other line item for that?
Yes, it falls, so I'll put a disclaimer that every insurance company is different.
Well, sure.
So, yes. So, generally speaking, you are subject to that 1% deductible. So that 1% deductible is called an all peril.
Okay.
So all peril is fire, theft, lightning, tornado, except wind and hail. But all peril is all those other ones.
Okay, good to know. So again, our $500,000 house, that would be $5,000 out of my pocket, and then the rest would be covered by insurance.
Yeah.
Okay.
Yeah.
And I was really remiss. I did not even introduce you properly at the beginning. So let's go backwards. Tammy Farmer is with Home Team Insurance, and that's where I moved all my insurance to. I was with a well-known company for years. And what really kind of, when Tammy came to us into our office and said, hey, it's kind of like I'll do a well checkup. Like we go get our bodies checked when we're feeling fine. It's not like we wait to get sick before we do that. And I was like, interesting. Well, I think I'll just give her all my insurance policies and see what happens here. So that's kind of what started all of this. But what really just knocked me upside the head was when the tornadoes hit Dallas. And we all remember that. It's only been 2 years. It was in a weird time of year and at night, and just obliterated neighborhoods. I mean, if you never drove through those neighborhoods after the tornado, it was heart-wrenching. It was just flattened. And people bought those homes. Some people bought those homes 10, 20, 30, 40 years ago. So they bought them at $200,000, and now it's worth $2 million, but they never updated their insurance. So their insurance was only on $200,000. And so this is one of those things, Tammy, that as much as I know about this industry, I was so ignorant about not stopping to think that I got my insurance when I bought my place, but appreciation is such that this house is now worth this, and replacement cost. Forget about appreciation. Forget about what I could sell it for. What's it going to take to rebuild the house should, heaven forbid, something happen?
Yes.
So if you do nothing else, for those of you who are listening, oh my gosh, if you do nothing else, give your insurance policy over to someone. I strongly recommend Tammy. Like I said, it saved me well over $1,000 a year. It was actually mind-boggling to me how high I was paying. And that's really what triggered it, is I got another insurance bill, right? And it was so much higher than the year before. I'm like, this just keeps going up and up and up. I'm not having a good time here. And so I handed all of my insurance policies, both my rentals, my personal home, my umbrella policy, my cars, all of them. And the savings on each one was so significant. So I urge you, if you get nothing else out of this one today, is just that. We check our bodies, we check our teeth, we check our cars, we check a lot of things. We never look at our insurance again. It's kind of like having your house inspected. You inspect it when you bought it, but nothing stands still. So really, so you're never going to look at it again? You're never going to have your house inspected again? That's, when you think about it that way, it's like, that's not the brightest thing that was ever done. But until you came and said that to us, I'll look at your policies and tell you if they're good or not. If they're good, great. No harm, no foul. Keep moving forward. But gosh, if you can save the money and get the same coverage, wait, let me think about that. Same coverage, everything's great. I'm going to save money. You got to be kidding me. Let me think about that. Okay, I did. It's good. I'm going to jump down to chat here in a second. But something else I want to talk about, because I get asked this many times. Our pipes are old. The slabs, our pipes are old, and our ground has moved, between tree roots, between cold, hot, our ground expands, it shifts, it does all that stuff. And so sewer line leaks are a big deal. And I'm finding them more and more, mainly because our old cast iron pipes are just disintegrating. And so you as a home, and we talked about this on the show. And so you all, when we talked about hydrostatic tests, so this is something we've talked about, but I want to hear about it from the insurance side of it. So if I have a sewer line leak, and let's say it's a slab foundation, I probably have to jackhammer up the slab, which ruin the floors, which means now I got to do that. So the question has come to me many times, does my insurance cover that? So answer that one for me, and I'm going to look at the chat box while you're talking.
So your insurance company, so this is kind of how I get this to make sense, is anything that's going to cost a lot of money, they're either going to cover it with limitations, or they're going to make you pay for it by adding it as an endorsement. Foundation coverage is not covered under your homeowner's insurance unless you add it as an endorsement. So leakage and seepage of sewer system, water damage is not covered under your policy unless you add it as an endorsement. Okay. So your homeowner's policy has what's called a policy jacket. So in that policy jacket, it's going to tell you your policy is going to cover these perils. Okay. Then it's going to tell you additional endorsements, and it's going to tell you what endorsements you have on your policy that are going to be covered. So an example is every single homeowner's policy that I personally quote, I put an enhanced water package on there, and I put foundation coverage, period. And if you want to take it off, I want you to send me an email that you want to take it off, because right. I want the record when something happens that you requested it to be removed, because I'm a firm believer in those endorsements. So let's just go back to our $500,000 house. And you might not be able to answer this just across the board. There may not be a one size fits all, and I certainly understand that. But what would an endorsement cost for, say, the sewer or the foundation? So water damage endorsement and foundation endorsement, I mean, you're talking about $150 for a year.
Oh, wow. That's
I mean,
nothing.
Of course, every company's different, but on average, I would say your water damage can be anywhere from $100 to $200 a year. Your foundation can be probably around $100 a year. But so back to what you were saying, and you made a really good point about, you go get a physical every year. So if your doctor, and this is kind of how I look at insurance, is if your doctor said you had cancer and you had 6 months to live, your health is that important that you would go get a second opinion. Okay. So insurance, I'm a firm believer that your insurance is money out of your pocket. The only time you're going to use it is if you have a claim. So it's worth getting a second opinion to make sure that when you do have a claim, you're going to have that coverage. Number one. Number two, it's always good because, like your doctor, they come out with different medicines quite often. So when you go to your doctor, how many times have you gone to your doctor and he's like, look, you were on this medicine, but they've come out with this medicine. Why don't we try this? I think it's going to benefit you more. Yeah. I do the same thing. I'm not your doctor, but I'm your second opinion. And every single year, you should be reviewing your insurance with your agent, because if they enhance an endorsement, you're going to want it enhanced in your policy too. They don't automatically do those. And I'll give you an example. I had a client that came to me and wanted me to look at their insurance. And so he said he'd owned his house for, 30 years. And I asked him, did you refinance your house? He said, no, I paid my house off 5 years ago. And I said, really? Well, you still have your Chase Bank listed as a mortgage holder. You do realize that if you have a claim and your house burns down, they're going to pay that money to Chase Bank.
Chase. Right. Oh my gosh.
So that's another reason, because things in our life change all the time.
Right.
So it's really good to review your insurance policy every single year.
I had no idea. See, I learned something new every day. I love doing the show because I learn something every time. I did not know, because my clients ask, would my homeowner's insurance cover the sewer line leak? And I said, no, that's, they don't. But if they get the endorsement on it, that would be huge, because the last one that I did, it was actually my buyer's, and we found the sewer line leak during our inspections, and it ended up being $32,000. I mean, Tammy, we're not talking about $100, $200, or $1,000 repair. Yes. We are talking huge. And my seller, way back when, before hydrostatic testing got to be such a big deal, they found the leak very, very isolated. It was right there in the bathroom. No big deal. We knew exactly where it was and we were ready to go. But when they put the new pipe with the old pipe crumbled. Go a little bit further. And when they put the new pipe with the old pipe, it crumbled. And we had to go a little bit further. Wow. $17,000 later, the seller was through. And it just broke my heart, because we would have never sold the house at 300 if we knew that it needed that, right? And then they had no recourse to go to their insurance company. And that didn't even include the cosmetics that had to happen, because they kept having to go through the house. And so this is not a small thing. So that is so interesting to me that you can do an endorsement for those additional repairs. There was a question in the chat box. And as always, guys, if you have a question, please go to the chat box and put it in there. So this says, the fact that we can have insured at a higher replacement cost do not imply insurance claim adjuster will pay the maximum claim. Again, there are depreciation claims. Adjusters, yes, put unto prior to giving us a check. How do we know how much to insure? Whoops, I just lost your video on you, Tammy. I don't know how that went, but your video just clicked off. I can still hear you, but anyway. There you are. And she's back. And she's back. Okay. So that's a really good point, because let's just say it's a roof really doesn't last 30 years, even though you've bought a 30-year roof. It doesn't last 30 years. So let's say at year 20, we have a hailstorm and damages the roof. Talk me through that. That's a really good question. I'm glad that person asked about the deductible. Really good question.
So you do, and this is something that you would need to talk to your insurance agent about, because some companies depreciate your roof. They don't give you replacement cost on your roof.
So let's just say the roof turns out to be $15,000. You've already eaten up over half of that life of that $1,500. So they may only give you $7,500.
Yes. Yep. So it's really important that whenever you are placed with your insurance company, or you contact your insurance company, ask them if they have replacement cost coverage. If they don't have replacement cost coverage, if it's an actual cash value or stated value policy, because there are several different types of homeowners policies. You have a basic homeowners policy that's probably an actual cash value. Well, actual cash value is minus depreciation. So if your roof gets damaged and the roofer comes out and says, okay, perfect, your insurance company's going to pay, your deductible is $5,000, but they're only paying because they're depreciating your roof because your roof is already 15 years old.
Right.
They're only going to pay this much money. So that's very important to look at your policy and see if it's a replacement cost policy, because it will tell you, it'll say replacement cost coverage, or it'll say limited replacement cost, or it'll say actual cash value.
Okay, good to know. That's just learned so much today. This is amazing. So tell me, what, other than roof, which we all know to be our major, especially here, what is another, well, I have several questions. Okay, first question. It's like, wait, I want to know, teacher, wait, what about me? Is it true that if you have your house insurance and car insurance at the same place, there's a little bit of savings there?
Yes.
Is that true?
Huh?
Okay, good to know. All right. And then what is the next, actually I have three questions, but what's the next largest claim? I know the roof is a biggie. What's another one that you see pretty,
I'm going to surprise you. Dog bite claims.
Oh my goodness.
Yes.
Oh my goodness.
Yes.
So how does that work? So I come into your house, your dog bites me, and what, I sue you? Or, okay. Wow.
And so there's some companies that exclude certain types of dogs. So if you had called me and asked me for a quote, I would ask you a series of questions. I'm going to ask you, do you have any dogs?
Yeah.
And I've had several people that have asked me, some people just answer you and they're like, yeah, I have two.
Yeah.
And
well,
some
yeah.
people are like, why are you asking me that? Well, that's one of your most highest liability claims on a homeowner, dog bites. So some companies won't do certain kind of animals. So let's say that you tell me, no, I don't have any dogs. And 6 months later, you have a Doberman.
Mm-hmm.
And I wrote you with a certain company that excludes Dobermans.
Right.
And someone sues you and they say, well, they had a Doberman and you've had this Doberman for 3 years, then that insurance company is going to say, we're not paying that. So then you know what that person can do? Then they're going to sue you personally.
Right.
So
Wow. Yeah, you're right. I am surprised. I'm like, didn't see that coming.
Yeah.
And then what's the next one?
Well, right now it seems to be water damage.
I could agree with, I could see that. All right. Now that's a good question. A good question on this is water from in to out or water from out to in. And is that two different coverages? Okay.
So, anybody listening, I'm going to give you some very, very, very good words not to say. When you file a claim that has to do with water damage, do not call and say my house is flooding, because they're automatically going to think, oh, flood, not covered. Don't tell them your house is flooding. Tell them I have water damage. I have water in my house on my floors or whatever. I will tell you that I had a client that had water damage. Now, water damage is only covered by endorsement. You have several types that it will cover. If your drainage system is clogged up and your drain outside in your yard is clogged up with debris and it pushes that water in your house, that probably is going to be covered because that's due to a faulty drainage system.
Okay.
Rising water because it just rained too much and it's getting in your house is considered a flood. Rising water is considered a flood. Now, if your pipe burst
Okay. So from in to out. Yeah.
Yes. So if your pipe burst and let's say your pipe burst and you didn't really know that it was leaking, there's an endorsement you can add to your policy. It's called leakage and seepage. So in 6 months, you notice that your floor is getting squishy because this pipe has been leaking. That endorsement is going to repair the pipe, the floor, everything. So,
okay. All right. So 2 different issues: water coming from out, flood, basically,
yep.
too much rain, snow, sleet, and hail comes in, which we had a lot of that.
Yes.
But also during the winter storm here, we had far more broke from inside the house. So two different issues. Okay, something that has always just been kind of a little bit of a pet peeve of mine, and so tell me, is this true, or is it true with every company, or just some horrible companies? But when you buy a house and you go to Tammy and say, I need insurance, Tammy's going to run what they call a clue report on 1234 Main Street. So she can see, now correct me if I'm wrong on any of this, because I make this stuff up as I go along. Tammy can see that there have been several claims for this house. There was a roof claim, there was a water claim, there was whatever, right? There were just several claims on this house. So it now shows her that this house is a high user of insurance. If the seller is trying to buy a new house, so this seller, 1234 Main Street, goes to buy a new house, goes to Tammy and says, I want to buy 456 Main Street, and she does a clue report on that, she will see that Miss Jones is a high user of insurance. So one, the house is a high user of insurance, meaning it needed a lot of repairs, whether it was roof, water, whatever. The house is a high user, meaning we might have problems down the road here because this house has already shown need of stuff. The flip side of that is it shows that Miss Jones is a, hey, let me get my insurance company on the phone to do this. And so both of them are problematic. As far as getting new insurance on the house, you might be at a higher rate, right? And Miss Jones might have to be a higher rate because she's a heavy user of insurance. So now it brings me to my question. When you call your insurance company and all you're doing is making a call, and I tell my clients, don't make your first call your insurance company. Make your first call the roofer. Make your first call the plumber. Make your first call the electrician before you call your insurance company. One, they're not going to fix it. So what's the point? But you need to find out what that problem really is. So if I were to call you first about the roof, some companies make that a claim. Like Mary Beth made a claim on her roof.
Whether we're going to pay it or not.
Exactly. But it didn't need to be, it wasn't a claimable offense. It wasn't enough damage or wasn't any damage, but I saw my neighbor getting a new roof. So I thought I'd make a phone call. So now it shows that I made a claim and didn't fix it. So it makes it even worse because now it says, well, you made a claim on this house. And when she goes to trying to sell my house, it's going, well, there was a roof claim in 2020. Did I just pocket the money? Did I not fix it? And by the way, that's illegal, but I'll get back to that in a second. So is that how that really works? Just because I made a phone call, you've had to mark in my file that I filed a claim.
And that is the same on home and auto. So I always tell my clients, so before you file a claim, get an estimate, period. Before you file a claim against your automobile, windshield breakage. So claims, and I'm going to speak general as far as home and auto because they're the same in this area. Claims count against you in several different ways. They count against you on the frequency to file a claim, the type of claim, the amount of the claim, and what the claim was for. So the frequency to file is just exactly what you just said. If every single time you're going to call and say, hey, I need a roof, or, is this damage covered? So your claims people have to be licensed in claims. They can't sell you insurance because they're not licensed in insurance, but they have to be licensed in claims. So they can't technically tell you if something is covered until they come and look at the property. A roofer can come for free. If they're a good roofer, they're going to give you a free estimate, and they're going to tell you, yes, you have enough to file a claim. What's your deductible? Because a good roofer is going to know how insurance companies work. So if on your vehicle insurance, if you take it to a body shop and they're like, I can't look at it until you file a claim, go to a different body shop because they don't know how insurance works. So the type of claim would be like a catastrophic claim or an accident. So my pipes bursting is an accident.
Right.
Wind and hail is catastrophic.
I think the pipe bursting is catastrophic, but that's just me.
In February, whenever we had the freeze,
right,
that was deemed catastrophic because it was the snow and the cold. So that was deemed catastrophic. But my hot water heater bursting and it ruining my floors is not going to be a catastrophic event.
Right.
So then the amount. So when a claim is filed, they put in a claim is filed, it shows open. When that claim is closed, they're going to show the amount that they paid. If they didn't pay anything, it'll show zero.
Well, that's good to know, because the way it seemed like was happening is you filed a claim and you didn't spend the money on that. Yeah. So good. It does show that they did not ever pay out.
Exactly.
Good to know.
Now, if it shows subrogation or open, another insurance company, if you have a claim that's still open, they're probably not going to write your insurance because they can't take that liability because you could come back. Right. So they're probably not going to write your insurance. I have a client right now that we're waiting until her claim is closed before we switch. Subrogating means that there was some underlying issues, and it doesn't necessarily mean that it's closed. So another insurance company might say, what happened? Tell me why that's in subrogation. It could be a dog bite claim. It could be a liability claim. It's not really a property claim.
Gotcha.
And so where you would have a problem, which would be insurance fraud, which is a legal offense, like what you said, right, is if you have a wind and hail claim and it shows that it paid out $25,000 in 2019, and you get an inspection for your buyer and they say that roof is 20 years old, that's going to be some red flags. Right. And if that happens and your buyer goes ahead and buys the property and then files a claim, the insurance company that they got is going to say, wait a minute, we're not going to cover that roof. It's new.
And that's something that buyers need to be very aware of, is if during your inspections, the inspector says, and we've talked about this on the show too, inspector's a generalist. We understand that. A roofer or a plumber or an electrician will always override the generalist, because you've gotten a specific. So if he gets up on the roof and says, I think I'm seeing some hail damage up here, and the roofer comes out and says, yeah, there is some significant hail damage up here, and the roof needs to be replaced or whatever, wear and tear, whatever it is, and the seller goes, oh, yeah, I'm not going to do that. Well, that's all well and good, but understand, buyer, your insurance company's not going to insure something that was their problem, not your problem. It happened on their watch.
Yes.
And so they get it's like going for health insurance. I know
having
this
a pre-existing condition.
Exactly. I had a cast on my arm. I was getting new insurance and I had a cast on my arm. I fractured my wrist, and the guy looked at me and he was like, we're not insuring your right arm until this date, right? So it's like, we'll insure the rest of your body,
Yep.
but not the right arm. And so they're not, the insurance company is not there to make something right that was already wrong.
Yeah.
That they're there to take a healthy house and move it forward. And that's not to say every house is, completely healthy. I get that, but they're not there to take a 25-year-old roof and go, oh, sure, we'll replace that. That's great. That's just not how it works. They're not there to solve all of your problems. That's not what insurance is for. And then you need to use it very judiciously. I think that's the other point that you're making that I've heard is get the expert out there first and let them give you your opinion, and whether it's your roof, whether it's your plumbing, whether it's whatever it is, get those people out there first.
Yes.
And then call the insurance company and go, is this covered?
Because these roofers, they see this all the time. That's all they do. So they can pretty much get on a roof and tell you, it's about 3 years old. This roof is about 10 years old. I mean, they can pretty much, they can tell you, well, this damage has been here or this damage is new. I mean, if they're good at what they do, then they're going to know the signs of old, new, pre-existing, new damage.
I find it interesting too that both roofers and you guys and the insurance companies have a report of hail. So I live in 75004, whatever, and so you can go in there and go, Mary Beth, there's not been any hail or damaging winds in your area at all. Or they can go back and go, oh yes, you all had a hailstorm in March of 2020 or whatever. They have those reports. And so it's not like you're telling them something that they're like, I didn't know. They have the ability, both the roofer and the insurance company have the ability to backtrack and see, was this a problem? I think the other telltale sign is when you start seeing a lot of people in your neighborhood getting new roofs, it would kind of make me go, maybe I ought to get that checked out, right? So I have some things in the chat. Let me look real quick. How do we know how much to insure? That is a great question. Let's cover that one, and then I'm gonna come back to the other one. But that's a perfect question. How do I know how much to insure my house for?
So every company has their own way to calculate your replacement cost. So I'll just tell you how I do it. Okay. So whenever I get your information, I pull up your house several different ways. I'll pull it up on the appraisal district because that's going to tell me details on the house. I pull it up on like Zillow, realtors.com.
Bane of my existence, Zillow. Anyway, go ahead.
I know, but I want to get the details. I want to know if it has marble countertops or laminate. I want to know if it has atrium picture windows or if it just has regular windows. I want to know if it has like a custom kitchen or just a basic builder's grade kitchen, because those things determine how much it's going to cost to replace your home.
To get like kind. Okay.
Yes. And so most companies have an estimator that goes in and it asks, you have to put in the square footage, you have to put in how many bathrooms, what kind of flooring they have, any special features that they have, like wet bars. I've been seeing a lot of that. Wet bars, skylights, solar panels. Those are special features. So at the end of putting all that in, then it comes up with the replacement cost. So they're estimating that if your house burnt completely to the ground today with all of these features in your home, plus the structure and the roof, this is how much they're estimating that it's going to be cost, which brings me to another endorsement that you need to look for on your policy, especially now, which is replacement cost coverage. Because let's say, I mean, Mary Beth, you know that building materials is going up.
Oh, yes.
I mean, just to get wood to rebuild something is high. We're in the process of remodeling our house, and the bids we got 3 months ago.
Oh, totally out the window.
Yes. So just think if I wrote your insurance and did a replacement cost estimator 6 months ago. Well, building costs keep going up. And instead of it costing $500,000 to rebuild your house, it burned all the way down to the ground, it's going to cost $700,000. Well, if you do not have replacement cost coverage, that insurance company is only going to pay you $500,000.
And then that's where the tornado, so
Exactly.
many of the tornado people, and when you see that they have not replaced, if you're driving down, say Royal Lane or North Haven area, or across the toll road into the to that area, you see, some have certainly come and gone and done their thing and replaced it and moved on, but some are still in that state of disrepair, or they got it torn down and that's where it stopped. Because like I said earlier in this, they bought it at 300,000. Now it's worth, million. They're still sitting here. That's all they have is that replacement cost of the 300,000 when they bought it. And so that is and just because you're able to buy a house today for 300,000, to have to start over and replace it, you wouldn't be able to replace it at 300,000. That's not it. And that seems really weird. And if you look at your appraisal, when you buy a house, your lender does your appraisal, there's a value there. And then there's a cost to replace it value. They do both on your appraisal, if you'll look. And those numbers don't match because, again, just because building costs are so high. But think about it, people used to work for minimum wage for, $1.25 an hour, and they ain't minimum wage anymore. So just to get a minimum wage worker, I mean, think about it from that, but to get experts in brick and in sheetrock and all of that, and the roof, it's exorbitant. So yeah, that's a really good. So basically now we're at 3 endorsements. We're at an endorsement for water, right? We're an endorsement for wind and hail, and an endorsement for replacement cost, above and beyond just my normal insurance for the house that I bought for $300,000. Okay.
Well, and also remodeling your house. So like we're remodeling our house. We bought it 10 years ago. Well, 10 years ago, it had carpet. It didn't have, it had laminate countertops. Well, we're getting marble countertops, and we're getting tile, and we're taking out, and we're remodeling a bathroom, completely remodeling it. Well, my replacement cost is going to be different. And we're adding on a room. So when we put in your replacement cost, so let's say my house is 2,000 square foot right now, I'm adding on 2 rooms and a bathroom. Well, now my square footage is 3,000 square foot.
Right.
My house burns down in 6 months, and I didn't tell my insurance company that I had an addition. Also tell your insurance company when you get a new roof, because that can affect your rate. But I didn't tell them that I added square footage. So they're going to give me money to replace a 2,000
the old house. Yeah. Wow. Let me go back to the checks. I see a couple of things coming in. This is so interesting to me. You'd think I've been doing this for 31 years now. You think I would have the knowledge of, but insurance is something that has always been so foreign to my even thinking about it, that it wasn't until you said, I'll look at your policies and see, what I can do. And that was the first time that made me just go, wow, this is, I am not the brightest bulb in the box. So it says, your foundation and plumbing and land cost together should be taken off from the replacement cost. I don't understand that. Why would you think that? I don't understand. Let me see if this is a whole question. Oops, where we go? Okay, here's one. This is from Raymond. As buyers, how should we shop for insurance coverage with different companies? What are the guidelines buyers need to look for? Credit rating, annual premium, how to compare, what to look out for. Okay. So, and then I think this is the same thing. Explain 20% co-insurance along with replacement cost. And I guess this was the same thing. Your foundation and plumbing and land costs together should be taken off from the replacement cost. Now I will jump into that one because it does, when you do buy a house for 300,000, 500,000, the land is a portion of that price. And many times, honestly, depending on parts of Dallas, I walk in and go, okay, the dirt is worth this.
Yes.
Is there $100,000 house sitting on it? I'd argue there is. Is there a $200,000 house sitting on it? Yep, I'd argue that too. So then this house should be 500,000. So you kind of build a case for, but when I buy that $500,000 house, you're insuring it for 500,000, and that's what the lender won't allow you to do it for any less, right?
Well, they used to not, but now, because lenders know that insurance does not cover land. So if they're buying the whole land, 2 acres and a house, they know that the insurance company is not going to insure that 2 acres. So some are getting, very few, but some are getting now to where, as long as we put replacement cost coverage, that they'll do the loan. Most still, like what you said, you have to do it for the full amount. But some lenders have gotten to where they will let us, as long as it's within a certain amount and it has replacement costs, like on your evidence of insurance that we have to send them. Let's just use 500,000 is the total cost, but the house only comes up to 350.
Right.
On that, we have to put policy has replacement cost coverage. So that way they know that it's going to replace that home. So co-insurance, 20% co-insurance and replacement cost are one and the same. It's just 20% is the percentage that they will go above that amount. Replacement cost coverage, some companies, I just happened to see that in that question in the chat about the co-insurance, but some insurance companies will do like 125% replacement cost. So that's kind of the similarity of replacement cost and co-insurance. Co-insurance normally has a percentage with it.
I don't think I'd ever even heard of that, co-insurance.
Yeah, I haven't heard it in a long time, but like I lived in Vermont for 7 years and I sold insurance up there, and they used 20% co-insurance a lot up there.
Okay.
So
interesting.
Co-insurance talks in percentages. Replacement costs normally talks in numbers.
Okay. And it never would have occurred to me, which again, not my brightest move, to shop for insurance. So is that the right thing to do? Is it because you just assume that you go to one of the biggies, and I think we all know who those, the biggies are out there, not necessarily great coverage. And when really bad things happen, like the tornado or all the problems after the storms, they sometimes are the last to jump in because they've been hit so hard that so many people have their have their insurance with these big companies that they can't handle it. I mean, they can't handle it. So shopping for insurance, clearly I've learned it would not have been a stupid thing to do to begin with. When I realized how much I saved by jumping over with Tammy, it made a I mean, not a small amount. It was huge.
And I would say asking questions. Like, just because I worked for 2 of the big insurance companies, and everybody's profile is different. So just because my insurance is cheaper than yours doesn't mean that your insurance is not as good as mine. It's just that every individual person is rated differently. That's why there's so many different companies. If they all offered the same thing and they all offered the same rates, there would be no competition. And so they would all probably be the same company. But that's why, because they all rate you as an individual and your profile, your insurance history, your credit profile, the longevity of your insurance, they all rate it differently. So whenever you're shopping around for insurance, my advice would be ask questions. What's important to you? I know what's important to me is if my house burns down to the ground and it costs more than $500,000, are you going to replace it?
Right.
If I have a roof, how much am I going to have to pay? What am I going to have to pay? Because I have a big house now, that had 3,500 square foot. That's a lot of roof. I want to know how much I'm going to have to pay. If my pipe bust, do I have coverage on that? No, you don't. I need coverage. Will you give me coverage? We don't offer that. Then you call someone that does, if that's what's important to you. So I would just recommend you to ask questions, because their job is to answer those questions. And if they can't answer those questions, I'm not afraid to say, you know what? I'm not sure, but give me an hour and I'll find out the answer.
Right. Well, and I want people to understand that you don't, the name Home Team Insurance, that's not the insurance. That's not the insurer. They look out at many different companies. Am I correct?
Yes,
so,
ma'am.
You may be end up with Safeco, or you may end up with Liberty, or you may end up with Chubb, you may end up. So it's not like they're not looking at a bigger picture for you. They're not looking at just one company. And I think that's what's helpful, is that you take whatever it is I needed, because some of mine are with this company and some of my houses are with this company. And so it's what was best for the area where the house is and the house itself and the profile of it and all that. So I want to make that really clear. It's that you are looking at a bigger picture for people.
Yes.
I want to go to one more chat, and then I want to ask another question, just because, now I'm just like, well, what about this? Okay. So that was the question about different companies. We talked about that. The foundation and plumbing and cost, we talked about that. When there is a fire or a tornado, the slab and underground plumbing and land costs are still preserved, 20% approximately deducted from replacement cost. Is that how that works?
I'm not sure, because whenever we do a replacement cost, we put in the information on the slab. So we have to put whether it's a concrete slab, a crawl space, a pier and beam. We have to put that in there. So that does play a factor in the replacement cost.
Yeah.
As far as the electrical, the plumbing, one of the questions that your insurance company is going to ask is, what type of plumbing do you have? What type of wiring? Do you have knob and tube wiring? Not very many people will do that.
Yeah.
And so if you have copper plumbing, copper pipes, you might have a hard time finding insurance. There's always going to be a company that's going to be able to insure you. It just might be costly, or they might have limitations. But as far as the replacement cost, I'm not sure about the plumbing or the electrical, but I would think the slab, because we have to put that on the estimator.
Right. I just had a question went right on my head. Oh, yes. I have heard, and so again, correct me if I'm wrong about this. When I go to show a house and there's a fire hydrant right there, I've been told that will lower your insurance rate because the access to the water is right there.
Yes.
So that's one of the things you look into, is where is the closest water source? And I don't mean your faucet with your water hose. I mean the fire hydrant.
Yes.
And so I tell my clients when I'm showing houses, that's something I often will point out, you need to be sure and tell your insurance agent that there is a fire hydrant within
500 feet.
Yeah. And that's a big deal. Having a security system will also reduce your cost, right? And there was one other thing that was just went out of my head. What is something else that would be something you'd be looking for that would be a positive?
So a monitored alarm system, sprinkler systems.
Thank you. That's where I was going next. Like, the condo has sprinkler system because it's 3 stories, et cetera, et cetera. But some houses have them too.
Yes.
And so, yeah, that dropped my cost as well. So, of course, it always terrifies me that someone else's fire is going to set off my sprinkler system.
I know.
But,
Yeah.
there is that. But, yeah. So, what have I not asked you? I feel like I've just thrown 4 million questions at you today. So it's,
Yeah.
but I've learned so much. It's been great.
Oh, good. Well, as far as I think the biggies are, don't file a claim until you get an estimate. I mean, that's huge. I just see so many people that it shows a claim filed and it was never paid out and closed. And I've told them, look, and there's some companies that won't write you if you have so many claims. And I've had companies that, have said, we're not going to write it. And I'm like, well, they had 3 of them that didn't pay out. And so, that's just huge, that your insurance company is not doing you a favor if they're letting you call and ask a claims question to a claims adjuster because they're filing that claim for you. And then just don't use flood, use water damage, and just ask questions. Ask questions. You want a replacement cost policy with your insurance. You want your personal property replaced. This is one thing too, is if you have things that are of high value, just think of it this way. High value, the insurance company's probably going to have a limitation on it. So high value. So if you have, I'm a girl, so I have a lot of jewelry. So I have to have my jewelry scheduled on a separate endorsement because most insurance policies limit jewelry coverage to $1,500 to $2,500, not per item, total. Guns for guys. Guns. If you have a lot of guns, it's like $1,000 total. So anything that you have of high value, you need to make sure your insurance company schedules that on your homeowners, because it's going to be really sad if you have a baby grand piano and you thought it was covered in your personal property and something happens and it's not.
Artwork's another one.
Yes.
Artwork, china, silver,
yep,
things like that. When you realize that, a piece of china that you have to spend $100 per plate and you get coverage for, something at Target. Yeah. So, and I've also been suggested that you go and take a video of some things like your artwork or your jewelry, lay it all out and take a picture of it, or just to have some kind of photo record. It doesn't have to be a video, it can be individual pictures, but just something that's on a file that helps them to know what, is this worth covering extra for? Is this, what, because there's so many things in our lives that are just not replaceable, and they're just not. And so, that was one of the questions I was going to ask, is separate coverage for things so, okay, on a normal insurance, let's go back to our $500,000 house, a $300,000 house, whatever. Content, what is the overall content coverage before you add anything else? Just couches, chairs.
So everything on, and I always say it, and I talk with my hands, I'm sorry, but
well, you see, I do too. Yes.
So everything from the studs in, so anything on your wall in is considered your personal property, your contents. So that's bathroom stuff, kitchen stuff, lawn mowers, tractors are different. You would need to have a separate policy for a tractor. If you had like a little Kubota tractor, just because you like to dig and plant trees and shrubs, that needs to be scheduled separately because there's limitations on things.
Basically
like that.
A car. It's a motor vehicle, right? Yeah. Like a motorcycle or a boat. Yeah.
Yes. And so any of your contents, that's everything. So your insurance is going to cover that stuff if it is non-existent. So you have to replace your whole entire house. That would be your contents coverage.
Yeah. So if you
And
walk through your house, you need to start looking at what that couch cost, what that chair cost, what did that credenza cost, what did your table cost, what is your, I think you'll find it's more than what the insurance is going to pay you.
Yes. And insurance policies too, you also, another thing to look for is replacement cost on your personal property. And the reason that's important, so is, let's say that lightning struck in your appliances, your TV.
Right.
You have 4 TVs in your house. So let's say you have a big screen TV and you call your insurance company and you tell them, lightning struck, I need to file a claim. My big screen TV, it won't even work. It was smoking. How old was it? Well, it's about 10 years old. They're not going to give you, if you do not have replacement cost on your personal property, they're going to depreciate that TV for 10 years ago.
Matter of fact, that TV, you probably owe the TV money because it lasted that long. It holds out its little hand every time you turn it on going, I really need some more money here.
Yes. So make sure replacement cost on your personal property.
Okay. There is, as you all can tell, because we are out of time, I could go on and on about this, Tammy. You have been a wealth of information, and I put Tammy's contact information in the chat box. So if you're wanting to get more information, first of all, you can always go to info@dallasnative.com and we will answer your questions, or we'll get answers for you. Clearly, I'm not the one to give you the answer on insurance because I just learned a bunch today, but we certainly know where to go to get the information. That's the major thing. But certainly go into info@dallasnative.com and ask your questions, or you can contact Tammy. I gave you her email address as well as her phone number, and so you can reach her there. But the main point to walk away from this conversation is, do not assume that because I got insurance way back when I bought this house, that's the last you need to do with it. That was an absolutely aha moment for me, was to realize, one, there's more than one company out there. Don't assume that your company is giving you the best deal or the best service or any of that stuff. And that's another thing, which we're not even going to cover right now, and that's service. I mean, when I'm sitting there having a car wreck on Central Expressway, I want to be able to get on the phone with my insurance company and go, what's the best way to handle this, right? And let's do it right now. What information do I need to get for you? What do I need to do here? And I want to be able to get someone on a phone, not a 1-800 number that has Fred answering that you don't, no offense, Fred, probably wrong word, but anyway, that, doesn't have a clue where you are or what you need or any of that stuff. So that service is important to me, but that's important to me whether I go to a restaurant or anywhere else. I want service. But two, you just hand money to the insurance company year after year after year, and you never go back and look at it. And that's what I want you to get out of this today more than anything, is just make a phone call, email the insurance and say, hey, look it over and tell me, am I covered enough? Is it, just ask the question. I think if you get nothing else out of this, get that. Is go check on your insurance. It's saying, thank you very much for the value information. I don't see Tammy's contact in the chat yet. I just put it in there before you, so it should be right above you. You should be able to scroll up and see it. If not, just email us when we're through, and I'll make sure you have it. But it is in the chat box at if you have a pencil and you want to write it down, or a pen. She's at 802-591-0809, and it's tammy.farmer@hometeam.com. So you can certainly reach her there. But it was the best call I ever made, that's for sure. And had you not said to us, hey, bring me your tired, you're poor, you're hungry, and I'll look it over, she said, I'll be in the office here and bring me your insurance policies and I'll look at them. And I think I brought you 6 of them. It's like, here, have at it. And so it was certainly worth time for me to be able to go, whoa, I didn't know that wasn't on there, or I didn't know that was, and I didn't need it, or whatever. So that's really the takeaway today, is just that. Don't assume, don't just sit back and go, I did this when I bought the house 20 years ago, I'm fine. No, you probably aren't. And really, you probably aren't. Those of you who bought it in a year or two, you might be okay. But those of you who've had insurance for a really long time, that's where you need to jump in. Am I missing anything here, Tammy? Any last words?
Nope. Just, I'm kind of like Mary Beth. I am very passionate about insurance and passionate that when you walk away from me, when you have that accident, number one, you can call me.
Yeah.
Number two, what your coverage is. That's huge to me. So don't hesitate to reach out to me, even if it's just with questions. I'm pretty much always available.
Yeah.
And thank you
again,
for having me. I appreciate it.
No, my pleasure. Listen, this was our pleasure today, believe me. And that's the other thing. Tammy's going to be as quick to tell you, you're good. Where you are, I can't beat it,
Absolutely.
and you're good. But wouldn't it give you a good feeling to know that you're good? That would make me as happy as knowing I need to go somewhere else. So it's not like,
Absolutely.
you have to change your insurance, but it would sure be good to know that where you are is you doing the right thing.
Exactly.
So that's the important thing. So again, thanks so much for listening. I don't take for granted that you all give us an hour of your time every Wednesday to hear what we have to say. And hopefully this one has brought you some knowledge that you didn't have before. It certainly enlightened me on some things I didn't know before. So thanks so much. And thanks for listening. Thanks, Tammy.
Thank you.
Bye.